We're going to take a look at the top 10 stocks millennial investors are holding right now. In addition, we're going to look at the sentiment analysis, what's driving the stock market, and what to expect going forward. So stay tuned for more. Thank you for watching. This is Richard with Wisdom Investor. We're going to take a look at the top stocks the millennials are holding right now. In addition to that, we're going to look at the sentiment. The sentiment is really confusing the markets right now. And also we're going to look at what drove the markets this week, and that was even more exciting. So let's take a look at the top stocks here the millennials are holding. Tesla up 409% year to date. Nvidia up 135%. And Boeing actually charged back this year. Even though it's down 48%, it made a pretty strong comeback this year. But these are stocks millennials are holding. Apple, one of the all-time favorites. But let's go back to Tesla here for a moment. Here's a chart of Tesla over the last year and a half. And you can definitely see this thing has had some big moves to the upside. Now, what's interesting, though, right now, this stock isn't near as hot as it was previous to September. You can see it's going pretty much sideways. Now, it's very possible this stock could move back down, but the electric vehicle stocks overall have been going like gangbusters here. Here's an ETF that invests in various electric vehicle stocks, Kinto Smart Mobility ETF, HAIL. You can see this has continued to bust higher here. This thing has been moving straight up. It's off the charts here. Now, if we go over here to NIO, this has also been on a tear straight up, but it was down about 14% today. Here's a headline from Business Insider. It says NIO tumbles 14% after renowned short seller Citron Research makes a bearish call citing increased Tesla competition. The big picture here is these electric vehicle stocks are outperforming the market. Again, this is HAIL, the ETF that gives you some diversification. This is NIO. It's also, as we said, been on a charge, the upside down 14% today, getting higher. There's Tesla. You can see it's cooled off from its previous months back a few months ago. Back to the top 10 holdings. We also talked about Nvidia, which is a semiconductor stock. Here's a semiconductor index. Nvidia is one of the top weighted stocks in the semiconductor index. But the index itself had a nice move off the election news, had a good pop off of Pfizer, but since it's cooled down here. So let's look at the top 5 stocks here in the semiconductor index. Here's Nvidia. You can see it's going sideways here pretty much forming a rectangular pattern here. We have highs here at the top and lows here, and it's kind of bouncing in between. Lost a little bit of its steam also. Let's look at Pfizer here real quick. They came out with a news saying that their product was going to be able to handle the COVID, had 90% results. The stock surged higher, and then since then, this thing has sold off, except today had a small move higher. Now, if this stock was, or maybe even the product was as good as they say it is, this stock would have continued on with some solid candles to the upside, but instead it sold off. Now, the other part of the news here, the CEO, which by the way had a planned sale, he sold about 60% of his stocks on this move up, but it was a planned sale, which is totally legal, but he most likely, I'm just speculating here, he positioned the planned sale to be the day that they decided to move this out. Keep in mind, not saying he did anything wrong here, but he definitely has an insider's opinion on what's going to happen to his stock. Let's take a look at the AAII sentiment survey here. We have the number of bullish investors here at 55.8%. The historical average is 38%, increased 17.9% just in the last week. What that means is a lot of investors are getting bullish in the market. They're thinking the market's going to go on higher. If we look down here to the low side here, a bearish, 24.9, we saw a pretty good drop of minus 6.6%. The average on that is 30.5, so now we're at 24.9. So we've overloaded, we're a little top heavy on the bulls, and we have a lower percentage of bearish investors. When we get top heavy in one area or the other, when we get too many bulls in the market, there's nobody left to buy it up. Now, this isn't all-time highs yet, but we are approaching that area. Again, let's look at the healthcare sector. We talked about Pfizer. Here's our gap up, had massive movement to the upside. However, this stock also, the ETF, sold off and since has not been able to move higher. So we're having a little bit of pause here. Let's look at the other XLV stocks. Johnson & Johnson. Johnson & Johnson, though, that is a fairly strong signal here with Johnson & Johnson continued to move higher, and they do have some drugs coming out for the COVID. Let's look at the Dow Jones Industrials DIA ETF. Again, here's this massive gap up. This thing was up about 5%. However, it started off at the highs, ended lower. Since then, we're holding pretty much into this support resistance area. The interesting thing here is this volume. It almost looks like an exhaustion gap, where all the shares come in here and it exhausts the move higher. If a situation like that has occurred, we won't know yet, but we would start to see the stock move lower here. Also, when a stock pops up like that, all those investors who are expecting a decline back here and that were short the stock market, they give up. And of course, this leaves no more short sellers in the market. When all the short sellers are out, then that's when the market has a chance to move lower. If we look at the NASDAQ 100 QQQ, again on that big up day with the Pfizer news, this sold off and then came back down one more day. But we didn't have the exhaustion to the upside. Right now, tech stocks are showing some weakness and they're having a hard time breaking up over the previous highs. If we look at the S&P 500 here, again, here's a massive volume, perhaps an exhaustion. We had that massive gap up, started at the top, ended lower, have not really been able to generate anything since then. Now, we did have an interesting stock market formation in here, which is called a 3-gap play. We had gap 1 here, gap 2 here, and gap 3. When we say gap here, we're talking about where the price was on the closing, and then it gapped up to a new price up above where the previous high was. So we had a 3-gap play. Typically, in many circumstances, 3-gap play is bearish. Now, the way some of the options are looking right now is that we could sink back down, which would be good to get us into some new buying opportunities. Right now, the best thing to do is dollar cost average. We really want to wait for a good opportunity to go all in, back up the truck. But right now, dollar cost averaging is the way to go. I want to thank you for watching. Stay tuned to further updates.